Are Bitcoin futures and derivatives going to ruin Bitcoin? Are they going to crush the price and never let it go up in value again? In this video, I'm going to explain why futures and derivatives on Bitcoin might not act like you think they will. We're going to take a look at what they did to gold, what they did to the silver markets, and when you see this, you're going to understand exactly how you can play this asset and proceed from here. So stay tuned. All right, welcome back. So if you're new to the channel, my name is Mark Moss. We like to talk about making money, investing money, success, lots of things like that. I talk a lot about Bitcoin cryptocurrencies, which I think is the best investment opportunity that we'll ever see. And so I'm actually making this video as part of a series I'm doing about Bitcoin. I had made a video about how Bitcoin gets to 100,000. I'm going to link to it up above here. And it got a lot of views. It got a lot of comments. And it got a lot of people stating negative or false things, right? They hear news headlines and they just tend to repeat those news headlines. And so I wanted to take a couple of those biggest topics and dispel those as best as I could. And one of the biggest ones that I heard was that the price of Bitcoin or Bitcoin would be ruined by derivatives, by futures. They were going to suppress the market, would never come back, and so on and so forth. And so here's a video. If you have other things that you think are false about Bitcoin or why it won't succeed, leave it in the comments down below, and I'll go ahead and make videos about those as well, and we'll just go through each topic one by one. Now, if you like this series, if you like Bitcoin, give me some likes on this. Go ahead and smash that like button right now. If you're not already subscribed to the channel, go ahead and hit subscribe. Make sure you turn that ring notification on, so as I make these additional videos, you're notified right away. Now, going right into it, like I said, one I hear all the time, probably the single biggest comment on that video about Bitcoin going to 100,000 is that the price of Bitcoin is going to be suppressed, that the markets are manipulated. Everyone's afraid that the markets are manipulated. And so, yeah, they're going to ruin Bitcoin, right? They're going to manipulate the price down. They're going to suppress it, depress the price. And government, as actually people said that government are going to use this as a tool to keep the price down. So the first thing that I'd say is everyone said, well, aren't you afraid the markets are manipulated? I'd say yes. Yeah, markets are manipulated. As a matter of fact, every market's manipulated, every single market. As a matter of fact, the Fed, right, the central bank of the United States and every other central bank for that matter, they exist for one purpose, one reason. Do you know what that is? The purpose of the central bank is to manipulate markets, period. That's what they're here for. So every market, the overall global market is manipulated, and every single market below that is manipulated. That's the entire purpose of their being, is to manipulate markets. And they do that by trying to control inflation through either increasing or decreasing the money supply or setting interest rates. So instead of having a free market where interest rates find their equilibrium based off of supply and demand, no, they set the interest rate. Instead of the money supply finding this equilibrium of supply and demand or having a fixed money supply, they set that, right? So their purpose is to manipulate markets. And so, yeah, am I afraid markets are manipulated? 100%. They are manipulated. Every single market is. And of course, with futures and derivatives, they manipulate markets too. Now, I don't think they necessarily were intended to be used for manipulation tools. But again, a tool is always something that can be used for good or for bad, right? Like a screwdriver could fix a car, or you could hurt somebody with a screwdriver, right? So a lot of times tools can be used good and bad. And basically what a futures or derivative contract is basically it's an agreement to buy or sell an asset or a commodity. Buy or sell an asset or a commodity at a specific date for a specific price. All right, so that's it. It's really simple. And really what it was used for a lot was, the main sectors that we see it really used in is food, energy, and metals. So if I'm a farmer growing crops, I can offset my risk on that crop by selling contracts against that. If I'm producing energy such as oil, things like that, precious metals, gold, silver, etc. And so we'll do that. And so what we do is we'd set the price of goods to limit my risk. So let's say like a famous story would be Southwest Airlines came out really big because when gas was cheap, they bought a bunch of futures contracts on gasoline at that cheap price. And then gas went way up. So while the other airlines were paying huge amounts for gasoline, Southwest had locked all their gas in at a low price, and they were way more profitable at a time when all the airlines were hurting. So that's one way that it can be used. It can also be used as against price drops. So let's say I was a seller, right? So I'm selling gold and I think the price of gold is going to go down, but I know that it's going to cost me X amount of dollars to get it out of the ground. So I'll go ahead and sell a future contract today. Now, if the price goes up, then I lose some of that upside, but I'm guaranteed to at least get that. So that's really how it's supposed to be how it's supposed to work. And there's two different types of these derivatives or these futures contracts that we see. And it's important to understand what these two main ways are. And the first one is cash. These are cash settled contracts, cash settled futures contracts. And then there's physical settled contracts. Now, it's a big difference, and one is much better than the other. So the first one is cash settled. And basically with cash settled is side bets. So it's not actually buying the asset, buying or selling the asset. We're basically just betting on the side of that asset, depending on which way the price is going to go up. And so it kind of distorts the market. I'll explain that. The next one is physical, and that's physically settled. And so in order to do a physically settled futures contract, then you actually have to buy it, hold it, and then deliver the actual asset. Now, at its most basic, economics professors, they want to make this seem way too complicated, but at its most basic, price is always derived from supply and demand. So when supply is limited but demand goes high, the price goes higher. And the opposite is true. When there's lots of supply and little demand, stuff's really, really cheap. And so what happens is, with whatever asset it is, whether it's gold, whether it's silver, or in this case, Bitcoin is a limited supply. It's scarce. And as more people want to buy it, the supply is fixed. There's more demand, the price should go up. But what happens is with cash settled is that instead of those investors, those institutional investors, instead of taking their millions, hundreds of millions, billions, whatever, and putting it into Bitcoin, thereby pushing the demand up for Bitcoin and taking it off the market, what they do is instead of putting their money into Bitcoin and messing with the supply and demand, is they just take that money and they bet on the price of Bitcoin. So they're doing it on the side. And so they're betting another institution, another hedge fund or whatever, I'll bet you $1 billion that Bitcoin goes to this price or that it falls by this price. But they're never actually buying the asset itself. And that's the important piece, because if they're buying the asset, then it starts to work against the supply and demand, and it can push the price up. If lots of people are buying it, it pushes the demand up. If nobody buys it, then the demand settles down. But when they're doing cash settled, they're just betting on the sidelines. And so we've seen quite a few of these futures and derivatives contracts start happening on Bitcoin. Now, a lot of people point to the crash in January of 2018 of the crash fell directly at the time when futures launched. And that's true. A lot of times, though, we have to understand the difference of causality and commonality. And so sometimes when something shows that things are in common, they want to say that that's the reason, that's why it happened. And we want to make sure, is it common that those two things happen at the same time, or was it actually the cause? And so there's proof that shows both ways. On one side, we know as investors, the age-old lesson is always buy the rumor, sell the news. And so if you look at the price of Bitcoin, when futures were first announced, the price of Bitcoin started shooting up. So everyone was buying the rumor, buying the rumor, buying the rumor, buying the rumor. And then we can show the same thing, that as soon as the futures came out, the price dropped. So buying the rumor, selling the news. And it put this massive selling pressure on it as soon as those futures came out. So there's one way we can look at it. We can also look at it as, well, it was also the first time that these institutions could come out in mass force and start to put shorts against it. And maybe that caused a lot of downward pressure. We could also say, well, what happens is, at its most basic, again, I like to boil this down, is that markets stop going up when there's no more buyers. Simple. Markets stop going down when there's no more sellers. And so the price was going up, the price was going up, the price was going up. But when futures came out, people didn't actually have to buy the asset. Now they could just bet on the side. And so markets stopped going up when there's no more buyers. And so buyers had stopped having to buy Bitcoin, and now they could just bet against it. And so maybe that's what happened. For a little bit bigger context, what I like to do is let's take a look at what futures did to other markets, like gold, for example, right? Bitcoin is like digital gold. We can look at silver as well. And so we'll look at that in context of silver and gold. Now, with silver, I did a video recently about silver is not what you think it is. I'll go ahead and link to it right up here. And I basically made the case that gold, the reason why you buy gold and silver used to be kind of the same. Gold and silver were kind of the same. both precious metals. But today, the reasons why we'd want to buy and own each one are different. Now, I'm not saying that either one is good or bad. I believe that they're both good investments. They're both good things to put your money into, but you need to understand why they're different because that affects how you hold it in your portfolio. So anyway, I'll link to that video up above. But in that video, and again, lots and lots of comments, and everyone said, but silver's so manipulated. And they pointed to a couple of things. So one, the Hunt brothers. So we know like in the late 70s and up into 1980, the Hunt brothers, these billionaires came and just started buying up the silver market. And they drove the price of silver up. Not only did they buy up all the physical silver they could, I think they got up to like 2/3 of the market. They also started buying all the futures contracts against it. And they started buying it. And of course, as they were taking all that supply off, they were also increasing the demand because the price was going up. So more people were trying to jump into it. And it pushed the price of silver way, way, way up. And then the government, the United States government got in and said, hey, no more, you guys can't do this. And you can't buy these futures contracts anymore. And of course, markets stopped going up when there's no more buyers. And so since the Hunt brothers couldn't buy anymore, what happened? The price of silver went back down again. And they lost a lot of money. They lost billions of dollars. They still had billions of dollars, so don't feel too bad for them. But that's one form of manipulation. And they did use a combination of physical and futures contracts in order to do that. Now, more recently, we've seen JP Morgan. They've tried to corner the silver market as well, kind of like the Hunt brothers did. Recently, I think there's been 3 traders that have been indicted for manipulating the markets. And so we know those markets are manipulated. Again, we know all markets are manipulated because of the central banks and what they're doing. That's one look at silver, but really gold is really what I want to look at because I think gold gives us a better idea of what we're looking at in the CME and the futures and derivatives market for Bitcoin specifically. So what is the gold? What is gold telling us? What is the history of futures on gold telling us? Well, basically what it tells us is that gold futures launched in 1974. All right. At that time, gold was about $183. So 1974, $183. Now, right after the futures launched on gold, the price fell. The price actually crashed. It went from $183 all the way down to $114. So actually took quite a tumble over 2 years. What's important to understand, though, is that it didn't mean that futures ruined futures ruined gold and that gold would never come back. As a matter of fact, 6 years later, a new all-time high in gold was reached. And by 1980, gold had gone from $183 all the way up to $664. 6 years later. So 2 years later, we had a dip, a pretty big dip. 6 years later, we had an all-time high of $664. Now, that wasn't the end. Now, futures didn't control gold. Futures didn't ruin gold. As a matter of fact, by 2011, the prices of gold had hit all the way almost to $2,000. So when futures launched, it was $183, dropped down to $114, and had gone all the way up to almost $2,000. It's almost 1,000% gain after the launch of futures. And so if we want to see what happens with futures and derivatives, yes, they're tools. They can be used for good, and of course, they can be used for bad. We've seen that. We're seeing JP Morgan traders getting charged for using them in the wrong way, and it can be used the wrong way against gold, and I think it is. But did it ruin gold? Did it ruin the investment potential of gold? Did it prevent it from going from $183 to $1,900, almost $2,000? No, it didn't. It didn't do that at all. And so what does that tell us about Bitcoin, right? If that can happen with gold, what does that tell us about Bitcoin? Well, what it tells us is that while the price can be manipulated, right? We know that people can stack up these contracts and sell these derivatives. We know that. It also shows that they can't keep it down, right? Gold went up 1,000%, 37 years after the launch of futures. 1,000%, 37 years after the launch of futures. And Bitcoin is kind of following the same path, where Bitcoin took a very similar dip, right? 2 years of bear market directly after the launch of futures. But then 1,000% return on Bitcoin from its previous all-time high of $2,000 or $20,000 would equal $200,000. Now, I'm not predicting that it's going to get to $200,000. I did make a video on how it can get to $100,000. My point is, for everybody who's worried about Bitcoin futures manipulating the price and never allowing it to rise up again, can look at gold and go, well, shoot, gold did lose value 2 years after the launch of futures, but it did hit a new all-time high 37 years later of 1,000% gain from its previous all-time high. And so again, if Bitcoin follows that same trajectory, we're looking at $200,000 Bitcoin. It's not bad. All right. Now, what are the difference makers? All right. So Bitcoin and gold are obviously different markets. There's a big difference there. As I've already said, with the futures themselves, there's two different types. There's physically settled and there's cash settled. Now, Bakkt, which is the parent, Bakkt is the parent company of the NYSE, the New York Stock Exchange. They were supposed to come out with a physically settled Bitcoin futures, and I was kind of excited about that. Overall, I'm not really happy with the futures market because of the potential for manipulation. I don't want to see the market manipulated. I'd love to see a free market, true supply and demand really dictate the price of that. And so I'm not a big fan of the futures. And while everybody's screaming for the institutions to come in, I wasn't really a big fan. Although when I saw that Bakkt was going to do a physically settled, I thought that'd be pretty good because they could come in, take a ton of it off the market and really impact that supply demand. Unfortunately, it's not seeming to be the way that they're doing this. And so actually they've been trying to move back to this cash settled, but I want you to know the difference. And so when you see people crying out for bring the futures, bring the institutions, just know what you're looking at, know what the differences are. Physical good, cash bad, right? We can keep it simple like that. But some of the difference between Bitcoin and gold is that Bitcoin is something that we can easily take delivery of. All right. So it's something that I can store, I can custody myself. I don't have to have vaults. I don't have to have giant safes. If your house was being robbed, it would be very hard to take that gold with you. But Bitcoin, you can keep a set of numbers in your head. You can take it anywhere you want. So it's very easy to take delivery of. It's very easy to transfer and move. And so because of that, I see more people wanting to buy it and hold it than they do with gold. I also have seen something that has really blown me away and made me super, super happy is that what Bitcoin's really been doing is creating this renaissance of like education and awareness. And now people are using the word fiat currency, which nobody used that 2 years ago. They're using fiat currency. People are taking the time to watch videos just like this, where we're talking about futures and derivative contracts, which nobody even cared about that before. And so we're seeing this increased education, and that's a really good thing. And even if Bitcoin were to fail, the big win is that people are aware now, people are paying attention, people are educating themselves. And so I believe this increased education is also going to help this fight against manipulation. Also, as we're taking Bitcoin or putting our money into Bitcoin, we're taking it out of the financial system. And as we take more and more money out of the financial system, we're limiting their power as well. So there's a lot of things. And at the end of the day, the last kind of defense that Bitcoin has, at the end of the day, we could fork it. And so basically you could have all these futures and all these financial products built on top of Bitcoin, and the community, the network could decide to fork Bitcoin to a new chain and take all the value to a new chain, and Wall Street and these institutions could be left holding a worthless Bitcoin because everything that they have, all their paper assets they built up, are now on a worthless chain. So at the end of the day, it does have a defense if it came down to that, but hopefully it won't. At the end of the day, we don't really know, right? We have an uncertain future. The whole world's uncertain. Tomorrow isn't guaranteed to us. If we had a crystal ball, it would sure make things easier, but we don't. So what we do is we try to understand the risks, the pros and the cons, right? The risks and rewards, and we control what we can. We can control what we're looking at. We can control the way that we can respond, and we need to practice proper risk management. Now, I believe in Bitcoin. I believe it's the future, but that doesn't mean it's going to. It's not 100% guaranteed, and so you need to manage your risk accordingly, use proper position sizes, paying attention to the signs, the news, and so forth, and then you need to move and act as it comes up. That makes sense? Tell me how you feel about Bitcoin futures now. Leave me in the comment down below. Did I cover it all? Do you still have questions? If so, like I said, make sure to ask them in the comments below. I try to answer every single question. I love having conversations back and forth with you guys. And other than that, smash that like button for me, please, and share this video with someone else who's afraid that Bitcoin futures are going to ruin the price of Bitcoin. And that's it. To your success. I'm out.